How to avoid penny stock scams. Without a doubt, the penny stock world is full of frauds, but as an investor, you should not be intimidated by that. Every endeavor has its risk and scams exist everywhere. You simply need to know how to avoid scams and you'll be good. Here are some ideas on how to make that happen. Number 1. Spot the difference between research and promotion. Promoters usually hire newsletter writers to come up with luring reports on their stocks. The writers compose something persuasive in relation to investing in fake penny stocks comprising of projections and sometimes intentional distortions to make their promotional creations seem like real research reports. However, you as the investor, you need to distinguish between the real and the fake. One sure way is by reading the disclosure section at the end. If it shows that the writer is directly compensated for the report, normally through a combination of stock and cash, by the company they are promoting, then that would essentially make it a mere advertisement and not an actual research report. Number 2. Check the financials of the company. Generally, penny stocks don't dispense thorough financial info, but you should take a step and check the financial statements that the company releases. Analyze the balance sheet to see if the company has a huge amount of debt or liabilities in arrears plus the net cash at hand. Make sure to also check the income statement, and if it shows a huge growth in revenues currently, then that's a good sign. Number 3. Check the credibility of the company's management. The quality of the management highly influences the success of a company. Though you don't expect to find a Bill Gates running a penny stock company, do research on the company's directors and executives. Find out their strategies, if they have had any significant failures, success, legal issues, etc. Number 4. Check the quality of disclosure. Companies with a greater level of corporate transparency are better to invest in. They have nothing to hide. Try and avoid companies that provide limited or no information. Number 5. Check if the business plan is achievable. You should evaluate whether the plan of the company you are interested in buying stocks is achievable, and also if it indeed has the professed asset base. With what we've learned so far in mind, let's now move on to discussing how and where to trade penny stocks.